So as momentum investing is getting more and more popular in India, and as momentum investors, we are seeing newer phases of the market. There are number of myths that are coming up in investor minds. People are forming different wrong opinions about momentum investing. And in this video, I want to go through some of the top myths that people have about momentum investing and bust them. So let's get started. Now, before we go into the myths about momentum investing, the first thing to note is that why do we love momentum so much? Why do so many investors actually invest in momentum? And why is everybody questioning momentum right now? Momentum is actually one of the best performing strategies in India. If you compare the performance of the major factor strategy in India, momentum, quality, growth, value, volatility, etc., you will see momentum actually performs the best among all the other strategies. While it performs really well, the markets right now have been going through a volatile phase, have been confused that, is the time for momentum over? Is momentum not going to work in volatile times? And a number of questions have come up. So this is what we are going to counter right now. But the first thing to note here is that momentum is actually over more than a decade been the best performing strategy out there in India. Let's go to the first myth, right? The first myth that people have is, like I said, that they think that momentum is sporadic. This return that have come over the last couple of years are going to go away. This is like a fluke. This is like a small thing that is happening right now, and it will not continue. But again, for this, we'll look at data. And if you look at data for more than, 9 years here, you will see that over the last 9 years, every year, momentum has actually outperformed the market by actually a big margin. So it is not a sporadic phenomena. It is a phenomenon that is consistently outperforming the market. It is actually an excellent opportunity. So this myth that momentum performance is sporadic has been busted. Now let's go to the second myth, right? So a lot of people think that momentum is not for me because I am a long-term investor. They think that long-term investors should stay away from momentum. Now again, this is a myth because if you look at the momentum portfolios, momentum does not have to be short-term, long-term, or of any term. You can do momentum for the long term, but you can also do momentum for the short term. Some people even do momentum in intraday basis. Momentum can actually be an excellent long-term investing strategy. And if you compare the performance of long-term momentum with the short-term momentum, you will see that the momentum in the long term actually performs the best. Momentum is an amazing long-term investing strategy, which is extremely suitable for long-term investors. Second myth, that is busted. Now moving on to the third myth, right? People think that momentum will not work in volatile times. They think that momentum is a strategy that will do well when the markets are good, but the moment the markets show volatility, momentum is not going to work. Now again, here there are a number of examples that you can see that in any sort of sideways or volatile market, momentum tends to do well. And the primary example we can take here is the last year, which has been volatile for the market. And even in that volatile market, momentum has actually outperformed the market by 10%. So momentum actually works in volatile times. And why does this happen? Because momentum is a very, very tactical strategy. Momentum is a tactical strategy where our allocation to sectors shift. So whereas the last year we were investing more into sectors, now we have moved to more safer sectors like FMCG, auto, etc. So momentum tactically shifts and it can outperform in any sort of given market scenario. This is the third myth that we have busted. Now moving on to the fourth myth. People think that we should be investing based on the fundamentals of the company or based on any news trend that is coming in the company. They think that investing based on price trends, which is what momentum does, is not correct, right? They think that momentum does not have a theory behind it. It does not have a rationale behind it. If you actually go to understand momentum, you will see that momentum has a lot of logic behind it. Momentum is actually based on investor behavior. People do not react immediately whenever a news comes for a particular stock. They take their time, they wait and see. As more and more people react, and when a critical trend sort of starts acting, everybody jumps in and a long-term trend forms. So this initial underreaction and then overreaction and herding sort of behavior leads to these long-term trends. And these long-term trends can only be defined based on investor behaviors because investors form the market. Looking at momentum is actually a very, very logical strategy. So this myth that there is no theory behind momentum is again busted. Moving on to the next myth, momentum is too risky and I shouldn't be investing in a momentum strategy. So now look at the performance of the momentum strategy here. You will see that obviously momentum has a slightly higher risk in the market. You will see that if the market has X, then momentum will have 10% higher risk than that. But a momentum strategy rewarded very high for the level of risk that it takes. So here I have the data for the last 10 years, and you will see that in most of the years, momentum gives you a majorly high risk adjusted compared to the market. Right? So with whatever slightly higher level of risk it is taking, it is giving you a much higher return for that. So it is an extremely rewarding strategy. It is a high risk, high return strategy, but it is not too risky. Now, the fifth myth of momentum investing that we have busted here. So as we have busted all these myths about the momentum investing, now I would like to take you through our momentum strategy, which is the right momentum strategy that is out there on Smallcase. Right? So right momentum is actually one of the best performing as well as the most affordable momentum portfolios out there. On Smallcase, you will see that we have given a 56% CAGR in the last couple of years. And not just that, over the last 1 month, we have given more than 12% return. You can check this out on Smallcase in the link that we have provided below. And as you look at it in various horizons, you will see that it tends to perform very strongly in any given horizon. Obviously, there will be times of risk and there will be time of volatility even with this strategy, as you can see in the chart here, but it always comes back up much stronger. So right now, as we see that the markets have started to recover, as conditions in the global market have started to slightly get better, commodity prices are coming down, and the situation in the US markets are getting stabler. Due to that, the foreign investors are looking at India again. We are seeing some amount of FII buying coming back. So we can see the equity market to get stronger and stronger from here. And as that happens, momentum will be a extremely attractive strategy for that market. So if you are optimistic right now about the potential of growth in the market, the potential of momentum being picked up in the market, I think looking at right momentum would be an excellent choice, and that is what I would recommend to you at the current juncture. For any updates or any changes that happen in the market from here, we'll be regularly updating you, we'll be regularly sending you these videos or creating such content to educate you about the market. So I hope I was able to bust the myths about momentum investing for you and you have a better understanding of the momentum investing strategy. And hopefully going forward, you can be a much better momentum investor along with right momentum.